And talking with someone today about the idea of working in a country or working from a country, it occurred to me that we really don't often talk about money laundering barriers. And this is a really important concept that most people don't ever have to think about. But in between international countries, there's almost universally some treaties and agreements and laws internationally that help countries oversee how money laundering is monitored or avoided. Part of that is the system that makes the idea of where you work in and from. Digital nomads work in one jurisdiction while maybe physically existing in another, where the money comes from. So if you're an American worker, you have a U.S. job, you get paid in the U.S., it goes to a U.S. bank. There's no ability to money launder to, let's say, Mexico because the money never comes to Mexico. When you do bring that money to Mexico, it's as a tourist pulling it out of an ATM. Whether or not you're resident in Mexico is irrelevant. It's that the money's coming from the U.S. and going through money laundering checks at the bank, coming out the ATM. You're clear. It's because you're working in the United States. If you were to get paid in Mexico, it would bypass those money laundering checks, and that's why they need a lot more paperwork. They have to approve you to work there before they can even consider the option.